my first employer, DuPont, to give me a $250,000 contract, and then I asked for like $100,000 in cash up front, and my negotiating technique was they said we don't normally do it, and I said, well, I don't have any money, and so I can't build the software you want unless you give me the money up front. And that negotiating strategy only works once in your life, but for me it worked, and so they wanted what I had to offer, and so they gave me the money. I said, well, I have 500 million in cash. Why don't we get more credit? And the answer is cash is trash. Why is cash trash? Well, if the money supply is expanding at 7% a year, then the risk-free hurdle rate is 7%. If you don't generate more than 7% yield on your cash, then it's devaluing. So all the cash you're holding is losing 7% of its value. So now you have to put a forecast in place. At what rate will the money supply expand? If it expands at 20% a year, and you're going to generate zero in treasury yield, then you're looking at cutting your treasury purchasing power in half in 3.5 years. I have to invest it in a strategy which is going to appreciate faster than the money is devalued. You can't save money with bonds unless you're buying bonds and the interest rates keep getting reduced. If you bought a bond at 4% yield and the interest rate got taken down to 3.5%, the bond trades up. You know, the short-term bond rate and interest rate goes to zero. You can't take it down anymore. So bonds won't hold value either. And the solution to the problem is you convert your assets from a weak currency that's inflating into a strong currency, or a strong asset, if you will, that is deflating. So what's your best strategy? Work hard, invest it, diversify into other Argentine companies making pesos? No. Your best strategy is convert all your existing pesos into dollars and get it out of the country. So what you're doing is you're financing in a weak currency, and then you're converting into a strong currency. You can liquidate $1 billion of Bitcoin on the weekend in any currency, you know, any time. Try liquidating $1 billion building, right? That's a 3-year process, right? So it's liquid, it's fungible, it's desirable. And so that's what makes the asset valuable, and it's the most difficult thing to impair.